Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Welcome to trade number 6. What you're looking at here is a recap of trade 5. We went in at the end of the day here, and as you remember, we ran up a little bit, price pulled back, and we closed at the end of the day on this day. As you remember, my marks on my screen show up a day later, but we closed at the end of the day. This is a reasonable exit, as I mentioned in the last video. When all you see is this last candle, is it a good time to get out or not? Turns out we did not kind of go the way we wanted to. Price jumped up a little bit one day, second day, and then Adam finally went in. We don't particularly like this kind of an entry because we're selling at a low price and we're buying at a higher price. And as you remember, we like to do exactly the opposite. We were looking for some continued pullback in this area, just never got it. But Adam's going to go ahead and go in, and we can watch that trade happen live. You can see our order going in, and trade number 6 is on. All right, this is not going the way we expected. So we went in at the end of the day here, and we're looking for price to go up. Did it go up? No, it went the opposite of up. It went down, followed by another down day, followed by a gap down. But luckily, it started to make a little bit of a comeback right here. Here's the great question. Is this the right place to exit? Is it going to go up higher? Is it going to roll back down? Nobody knows, but Adam is going to go ahead and take an exit here. We can watch that order go in. This one took a particularly long time to close. I mentioned after hours orders go in at limits, and sometimes the price moves from the close price. And so it takes a little bit more time for that order to go ahead and fill, but it eventually does. And we're now going to take a loss on this position. Normally we would head over to our tracking sheet, but before we go there, I just want to show you what happened even the next day, because this couldn't be any worse. So we closed on the 21st at the end of the day here. The next day was the day that I think it was NVIDIA reported some great earnings. Its stock price jumped up something like 15%. It drove some of the movement in the market. And take a look at this gap up and complete run. So Adam and I had a little sit down, and we said, we couldn't do any worse. We had a good trade on trade 5, exited on a pullback. You could argue, is that good or bad? If we would have waited, it'd been great. If we never would have exited, it would have been great. If we never got into trade 6, it would be great. But trade 6, we bought at a high price, sold at a lower price, and the next day the market had really nice price movement. So Adam and I definitely need to have some conversations about this sort of thing happening. But in all seriousness, there's no way to predict this. And I think that's even interesting too, because in some ways trading is always just chance. Something like this could happen where there's a big move in the market for something expected or unexpected, clearly not expected on our side. But let's head over to the tracking sheet. We'll worry about this. This will be in the next trade to see where we go in. Let's head over to the tracking sheet and see how we're doing as of trade 6. All right, that trade closed on February 21st. The S&P 500 was at 479.21. From its last price movement, the change is about 0.66, bringing its year-to-date return to 4.61. Not too bad. We're heading toward the end of February. S&P's doing all right. We, however, lost 2% on that trade. That brings us to a year-to-date return of 4.79. We were definitely doing well out of the gate here, but we took a little bit of a loss at the same time the market was moving up. And one thing I do want just to call out is you may notice that 704 minus 2.1 may not equal, 4.79, but these are compounding returns. So whatever we make or lose in the market, we add that back in on our next trade. That's one of the advantages that we have over just buying and holding, is that we can, if the price moves in our favor, we can actually make some additional gains. The risk is if it doesn't, it does hurt us a bit too. So that brings our comparison year to date to S&P 500 buying and holding it, 4.61 compared to 4.79. We're beating the S&P, but I wouldn't call it by anything spectacular. That last trade brought our percent win trades to 67% and our profit factor to 2.51. Those are still respectable, but we definitely like to see those higher. Hopefully in our next trade, we'll do a little bit better. Looking at our 4-year, year over year, we're basically neck and neck with the S&P 500. We still have about 10 months to go in the year, so still quite a bit. Hopefully we'll be able to maintain our beating the market this year as well. We'll have to find out on our next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.